My experience has been that as long as you're profitable and you manage your cash to a reasonable level, you're going to be fine, right? But if you go 3 months being unprofitable, and even if you're managing your cash well, obviously sooner or later it's going to dry up. But the opposite is true, is if you're profitable all the time, but you haven't been watching your cash, that can dry up really fast too.
Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo, using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. Today, we're focused on improving profit and cash flow for you. At the core, we need good data. Then we need to review the data. And most importantly, we need to take action on the data. Each of these areas has its problems and issues, and we'll chat about that along with how you can improve it. Bottom line is ownership, creating a rhythm to analyze and decide what's next. Nate Jenson has a master's degree in forensic accounting. He's a certified management accountant and a certified in strategy and competitive analysis. But more importantly, he has somewhere around 30,000 hours of helping small business owners understand what's driving or inhibiting their profitability and cash flow and what to do about it. He has built and sold 3 bookkeeping and CFO companies, having helped over 50 companies to get insight into their profitability. His current focus is on providing this insight in a more automated way so that companies that need the insight but can't quite afford a fractional CFO can still have a clear picture of what they need to change and improve their profitability. My favorite subject. Let's meet Nate. Welcome to the Profit Answer Man, Nate Jenson. It's great to have you join us today.
Thank you, Rocky. Appreciate you having me on. I'm excited to talk with you and get in front of your audience a little bit. Hopefully I have something of value to offer.
I know that you will. So can you share a little bit about yourself and your business?
Yeah, you bet. I've been in the accounting industry for 15 to 20 years. When I say accounting, I'm actually not in tax. Most people think of tax when you say accounting. I actually got a bachelor's degree in marketing way back in 2004 and could not get a job to save my life. I struggled. I was a young father, had 3 kids at the time, and I just couldn't make marketing work for me. Stumbled into accounting, really starting in bookkeeping. And as I got into that, I went back to school and got some more education and learned the value and the power of having good books and good accounting. And so where most people, they grow up and they say, I'm going to be most people don't grow up to say they're going to be an accountant. But those that do, they go to school for accounting and they go and work for the Big Four and they learn tax and learn audit. I actually went back to school and got a master's in forensic accounting about 10 years ago now. And because of the way I got in, I was already entrenched in small business at the time. I never went to work for the Big Four, so I didn't go through the tax. I do have some audit experience, but not a ton. And my focus has really always been about driving profitability for small business. I became a certified management accountant in, I think it was 2010. And a certified management accountant, a CMA, is focused on profitability. How do we take the financial data from a company and interpret it, analyze it, right? So we can actually drive process changes or other changes to the business to improve profitability. How's that?
That's what this show is all about, improving profitability.
All right.
Out of curiosity, do you know the numbers? Like if I looked at all accounting, what percentage of accountants are CMAs? Small, big?
Yeah, it'd be a smaller percentage for sure. It's definitely not as well known as the CPA. However, the Institute of Management Accountants that gives that credential, they're very quick to point out that most accountants, most people who work as accountants work in business, right? They're working as bookkeepers and as controllers and as CFOs, where the CMA certification and things that you have to know to get that certification are a lot more applicable, right? So if you're a tax guy and you're working as a controller, that's great, but you're maybe overqualified for that. But if you're a CMA and you're working inside a business and you're doing not just the bookkeeping and controllership, but you're analyzing those numbers, the skill set of a CMA is much more geared towards improving that piece of a business rather than like tax planning.
And that makes total sense. Each of these people have their own particular areas and niches. It's funny because if you talk to CPAs and you ask them what was their least favorite class, it's usually management accounting.
Is that right?
Yeah, it's the class they really struggle with because it's a whole different way of looking at things than they're used to. They're not putting numbers in a box anymore. They're trying to figure out what's driving profitability and all of that. And most accountants don't usually focus on that.
Well, it's funny you say that because when I started out bookkeeping, one of my very first employers, when I was a bookkeeper, he could tell really quickly that I did not have a clue really when it came to accounting, right? And he said, look, if you want, I will pay for you to go take a class on accounting at the community college. And I said, great, let's do it. And I went and I actually took two. I took managerial accounting and I took cost accounting. And it was those two classes that made me fall in love with it. I'm like, every day I was in class. I'm like, I didn't know you could do this with accounting. I didn't know you could do this with accounting. Because again, to me, I thought it was just tax really was my perception. And so when every day I'm like, oh, wow, I understood, I learned how to take total costs and like apply them down to the client or the product or the sales channel or whatever, and be able to say this sales channel is profitable and this one is not, or this product is profitable, this one is not. And it became so clear that was when I'm like, oh, I've got to know more. And so I went and got my CMA, and then a year or two later, I went and started my master's program. So,
most companies can't answer that question. Which product line is profitable? Which service line? Which client?
I know. And well, selfishly, I will say that's why I can do what I do. That's why people need my skills, because there's not a lot of people that can do that.
There's not. And I'm surprised because it's not that difficult. It's all tracking down the actual inputs and then putting dollars to the inputs and to the time.
Yes. Yeah. And let's be honest, in a small business, tracking time is one of the most difficult inputs in my experience. Getting employees to track time, if your culture has not asked that of them before, that's one of the hurdles that a lot of my clients in the past have faced, is how do we get people to track time? And I've had experiences, and even recently with the change in the economy where it seems to be shifting right now. I've had employers go from, hey, everybody, please track your time. Hey, this is really important, to, hey, it's time to track your time or you're fired. Like it's become that. And I'm not even joking about that. It's happened. We need the data, right? If you don't have the data, how can you measure it? How can you manage it?
But even in large corporations, they don't have the ability to get that granular.
Yeah, I mean, it depends on the corporation. There's a lot that are, let's say you're a call center and you can track when your people are on the phone, that kind of thing. But if you're a manufacturer and people got to go and like clock out of one job and clock into another one, it's tough.
It is. And I think that's why this is such a difficult process. Mm-hmm. Why do you think most businesses struggle to be profitable and to maintain cash flow?
There's a lot of reasons it could be, right? I had a good friend once tell me that enough revenue solves just about any business problem. There's definitely some truth to that. But I've also seen companies who have increased their revenues, but then they increase their resource costs, commensurate with that increase in revenues. Like they hire more labor or expand their facilities, and they're not making any more money. And I think for me, from my perception, right? I'm the accountant. My perception is that the reason for that is they simply don't have the tools in place to measure their profitability and measure what's driving their profitability. So you and I were talking before we started recording a little bit about, like, hey, anybody can just go to QuickBooks and print off their P&L and see how they're doing. And that's a great starting point. But once you have that information, what do you do with it? It's very hard to take a full company P&L and say, oh, this means we need to take this action, right? We're overstaffed or our prices are too low or whatever it is. You need to go, drill down and look at different metrics and, not just line items on the P&L, but their relationship to each other to be able to have some decision-making data to improve your profits.
You do. And depending on the company, there are times where I can look at the P&L and decide right up front, I can at least see where the problem is. Mm-hmm. And a lot of times it's clear as day. So, and also understanding what business they're in and how they're doing. So usually we can get a pretty good idea. It doesn't mean we can fix it because a lot of times there's constraints beyond our control and we've got to change the way we do business. We rethink the way we do business. So that happens a lot of times. And I think a lot of people get confused because the P&L says they're profitable and yet they have no cash. Mm-hmm. So why does that happen?
Well, there's two different things. And this is, as a management accountant, I want to look at financial statements on an accrual basis because an accrual basis says, hey, we earned the money this month, our income and our expenses. Even if we didn't collect the cash, it tells us how well we performed, right? Assuming the cash is going to come in at some point. But when you look at it that way, you've got to go an extra step to see where the cash is. Is it tied up in AR? Did you invest in something that didn't hit your P&L that's tying up your cash? And so people I think the first thing, honestly, Rocky, is people have to understand that they are tracking two different metrics. One is how profitable are we? And then two is what's our cash flow like? And there's different ways to measure cash flow. You can look at your AR and your AP. You can do a forecast to see when you expect it to come in. My experience has been that as long as you're profitable and you manage your cash to a reasonable level, you're going to be fine, right? But if you go 3 months being unprofitable, and even if you're managing your cash well, obviously sooner or later it's going to dry up. But the opposite is true, is if you're profitable all the time, but you haven't been watching your cash, that can dry up really fast too. I'm a big proponent of forecasting and not just doing like a P&L forecast, but doing a cash forecast. And to be able to look, 8 weeks out and say, okay, in week 6, we're out of money. If everything goes according to plan, what do we do? How do we solve that? And sometimes you get a line of credit. Maybe you can reduce your short-term costs on certain resources. But if it's like Monday and you have payroll on Friday and you're out of cash and it's, you're just being made aware of it, it's a whole different situation. You have very few options. So forecast your cash. And for me, that's the main tool you have in your toolkit to manage your cash flow, is just looking ahead, right? It's not just checking your bank or even reconciling your accounts. It's looking ahead and saying, when is it coming in and how much is going out and the timing of that.
What % of business owners actually look ahead and forecast?
So in my experience, keep in mind, my experience is when people come to me, it's because they know they need help, right? But in my experience, it's almost none, if any. And that's one of the first things that we would do when I was doing my bookkeeping, controller, and CFO business is we would set up their forecasts, starting with the profit forecast and then the cash flows.
We talked about this for a moment before I hit record. How many people actually go into QuickBooks or whatever accounting software and start entering in the transactions for what's due in the upcoming month ahead of time so they can see what that ending cash flow is starting to look like?
Again, I'm just making a percentage here, right? Well, I'm not going to give you a number, but if it's a business owner, again, this is my experience. If it's a business owner who's doing the books, that business owner typically is going to have a stack of invoices on his or her desk. And then when someone calls and says, hey, you haven't paid an invoice, they're going to shuffle through those invoices and be like, okay, I think we need to pay these 5, and they'll write checks and send them off. Someone who has a bookkeeper, like an in-house bookkeeper or even an outsourced bookkeeper, they're typically a lot better at that because that's the bookkeeper's job of just putting it in QuickBooks or Xero or whatever they use and being able to say, here's our accounts payable. We're expecting this much cash to go out. Thing is, even if you're doing that and you put it in accounts payable, you can look at your aging But unless you take the time to say, okay, I've got this much cash coming in due to collecting receivables or daily sales. I've got this much cash going out on my bill pays or my credit card payments or my payroll. It's not very useful in terms of managing your cash flow, right? You've got just having, hey, I know I owe 50,000 in AP doesn't mean you know when that cash is going out. And it obviously doesn't mean you know other cash that's coming in to balance that. You've got to put it in, for me, I put it in a spreadsheet, 8 weeks, and here's the inflows of this every single week. Here are the outflows every single week. And I know where I'm going. Now, I told you I would build on this, and I will. I've said this maybe hundreds of times when it comes to data analysis. And this also is a percentage I'm totally making up, but I believe it. 95% of your data analysis happens in your data entry. And what I mean by that is I've had people come to me with a messy set of books and say, hey, can you help us? Can you tell us what we need to do to be profitable? And all I can tell them at that point is, yes, you need better bookkeeping. That's the first step to becoming more profitable. And which is fine, right? Because there are a lot of people in that situation. And so I don't mean to disparage anybody who's at that level. That's, if you're one of those visionary entrepreneurs and you start a business, bookkeeping is often the last thing on your mind. But to get the data to a point where we can analyze it, measure it, and use it to drive action, say, make this change, and this change, and make more money, you got to have good record keeping. Sometimes I've seen a lot of books that just haven't been kept. I've seen books that have been kept really badly and they've had to be kind of unwound and then rebuilt to get to that data point. But see, there is value even in that piece of advice, right? Because when someone comes and says, hey, what do I need to do to be more profitable? And I say, you've got to do better bookkeeping. Great. That's the first step because you have to get to that step to get to the next step. And so as I'm able to say, okay, change the way you're doing this and this and this. And once they have that fixed in their bookkeeping process, then suddenly they have data. Then I can say, here's what's driving your profitability or restricting your profitability. Here's what's, hindering your cash flow. And here's what we've got to change. For me, that's the biggest problem that I see in small business is they simply haven't kept their books in a way that we can analyze the data. We can give them good information back.
It's funny because this is the way I've been doing my finances, even my personal finances for decades. And even in the business, I will go in and do that. I know usually what my credit card bill is going to be due in 30 days. And so I'll just go in and I'll start inputting all my upcoming credit card bills because they're all auto pay. I don't even have to, I automate all of this stuff.
Yeah.
And so all I have to do is go look at what my negative balance in my bank account is and say, okay, am I going to have enough in sales to make that positive? Because I know that off the top of my head. If I know that it's not going to happen, then I know there's a problem this month and that we have to do something to cover it. But that allows me to plan ahead and say, okay, I know that there's going to be a shortfall coming up. Now, with many of my clients who have a lot more transactions than I do, then we'll plan out 13-week cash flow planners. Some of them, we do 12-month cash flow planning because it's long cycles between when the sale is made, when the actual different production phases occur. So all that cash is going out, and then when the cash finally comes in. So if you've got a business like that, you definitely need to know long-term, what does that cycle look like? And every business is different in the way they do things. So they have to figure out what's our cycle that we really need to manage and figure out for us. Yeah.
I think it's important to note too, is if you're a one-man show small business, right? I'm not going to be the one that says, hey, you need a $3,000 a month bookkeeper in there keeping track of your stuff. You're not going to get the value out of a full-time bookkeeper, right? But as soon as you start to add employees and add that complexity, you need at least someone who's going to not only do that cash flow forecast for you, but do it in such a way where if that person leaves, the next person can pick it up and it's not that hard, right? It can't just be so in someone's mind where it's like, okay, I know my credit card bill's about $30,000 a month, so let me just, someone new coming in, they're not going to know that. You got to have a system in place for it.
And that makes total sense. You do have to have a system, and it needs to be something that is easily understood and that people can do. And again, you don't have to be the one doing it, but somebody needs to bring it to you because you still need to watch it. Because there's things that you may know as a business owner that they may not know, or things that you're aware of that they're not aware of. And just because you need to be aware of what's going on in your business, you can't hand off finances and not at least watch them. And I think that's, you don't have to do in depth, but a little bit of watching goes a long, long way.
Well, and I probably should have mentioned this at the beginning of the call when you asked me about my business. My website, zerotocfo.com, zerotocfo.com. That's really what we specialize in is, and I mentioned to you, I sold off my bookkeeping and my controller business. And what I do now is I help my clients see their data on a regular basis. It's very much automated reporting. You can get an email that says, hey, you got a new report, or you can just log in anytime you want to see it. But the simple act of putting your numbers in front of you, and the numbers, they've got to be clear and concise, right? Like you can't have a 20-page report every 2 weeks or you're just not going to read it. And so a simple financial dashboard that says, here's your labor utilization rates, here's your profit for the month and how it compares to last month, here's your forecast for the next 3 months. You can jump into a dashboard like that and very quickly see red flags. See, oh, our cash is going down fast. What's going on? Or it's forecasted to go down fast. Our sales are forecast to go down. What's going on there? And you're able to make those changes. One of the metrics, I'm thinking of a specific client that we use, is things like, what are some of your expenses as a percentage of your gross profit? So what's your labor as a percent of gross profit? What's your facilities cost, like rent and utilities? What's your marketing cost? And we set up targets for each of those broad categories. And so we can very quickly say, okay, out of these 4 or 5 categories, is anybody not within their limit, within their target? And if, let's say, facilities, just as an example, is too high as a percentage of gross profit compared to what the target is, what target we've set, we're able to look at that and say, okay, what's happened? I need some water. Has our gross profit decreased, which would have, thrown all those metrics out of whack? Or did we take on too much facilities expense? Did we hire maybe a cleaner that's pushing that over? Are there utilities going up? Things like that. Because when you can identify that, it's that broad category as a percentage of your gross profit, you're able to control your EBITDA, your net income as a percentage of gross profit. And so those categories may not be the same for every industry, and the targets certainly won't be. But being able to look at that kind of information on, again, just one dashboard, it's all right there in front of you. It's very easy to see where your problems are. If people say, hey, I'm going to hand all this stuff off to my bookkeeper or my controller and just trust that they're going to manage it, I'm telling you, they're not. They might be a great bookkeeper. They might even be a great controller. But unless they're specifically in a role where they know they're supposed to be looking for these red flags and bringing them to attention and making changes, it's not going to happen. So I agree with you, Rocky, that the owner, especially in a small business, needs to be involved in that process, and they need to have those numbers in front of them almost constantly to just avoid any problems that are coming down the road, be able to see them before they happen.
And that comes back to kind of where we started. All of that is management accounting, which controllers and bookkeepers are not trained in or they don't like. They're making sure that the numbers are right. They're not looking at the numbers to say, oh, that number's a red flag, even though it's correct, right?
Yeah, exactly.
And that's kind of the difference.
That's the bridge that needs to happen, right? Is taking the numbers, taking the data, and getting to action. Most people see their P&L at the end of the month, if even that, and they don't know what to do about it, right? It's like, hey, this month we lost $5,000. It was a bad month. Well, what do? Either we work harder, we sell more, or maybe we need to lay somebody off. I'm not sure. Let's try one of those, right? And again, you mentioned there's other things you can't see on the P&L. But what I try to do with my dashboards is to pinpoint where that problem is. Maybe it's with a client. Maybe it's with, again, that broad facilities category or labor category, but help you zero in on, hey, here's where our expenses are not in line with our revenues, and we've either got to raise revenues or lower that group of expenses somehow. So the more finite we can get those details, the more actionable it is.
And I'm not always a fan of raising revenue, because if the business model is broke, raising revenue just increases the amount of cash going out the door if it's not done properly. And I think that's where everyone's attitude is just get more money doesn't always work depending on your business model. And so that's a struggle. What are the biggest struggles that you see most small business owners have with their finances?
Honestly, well, I guess it's 2 things. One is it's in the bookkeeping, and it's getting the data into, again, let's use QuickBooks because that's what most people are probably using. It's getting the data into QuickBooks in a timely manner, reconciling it, making sure it's accurate, right? Those kinds of things. And then once it's in there, looking at it to have the numbers tell them how to run their business. Again, I always have in mind sort of this visionary entrepreneur who's a super go-getter. They start this business and they have such a belief in themselves and their product that they just attract clients, right? Clients show up saying, I don't know what you're even selling, but I want it, because, they're that kind of magnetic personality. But that kind of personality seldom takes the time or has the time to sit down and say, I'm going to spend 2 hours entering my bills, entering my credit card charges, reconciling my accounts. And so that's why I say, even as you start to grow your business in complexity, you need to have somebody in that role who's going to make sure those numbers are right. But then you've also got to take the time, and you have to take the time as a business owner to look at those numbers and see what they tell you. So I think that's the biggest thing I see, is just either bad bookkeeping or people not taking the time to kind of get the roadmap from the numbers in the business.
And I think the biggest struggle I see is, number one, there's no standardization for bookkeeping, right? Technically, there isn't even a standard there is a standard for chart of accounts, but if things aren't flowing the way they're supposed to, and what I see most often with bookkeepers, especially when they're outsourced and they're cheap, is that they do everything based on rules. So it's all automated. Yeah, absolutely. And more often than not, the automations are either wrong, or when one-offs come up, it's up to the business owner to get back to the bookkeeper. And that doesn't happen for years, months on end, right?
I've seen that too, yeah.
All the time. So it's having a bookkeeper who's good at what they do, and valuing the fact that if you don't have good books, you're in trouble. And people don't want to pay for that because they can't see the profitability in it. But until you have good books, we can't find the profitability in your company. Yeah. And then making sure it's done right, because I think that visionary business owner, that's not his skill set. And so they're not spending the time to oversee that position properly.
There's something I would add to what you said, is you said you need a bookkeeper who's good at their job. I think that's half the equation, because a bookkeeper who's good at their job, that might mean that they keep them accurately, they keep them timely, and they can print off their P&L at the end of each month, and the business owner says, yes, I made money or I lost money. I think to make the whole thing work, you've got to have a bookkeeper who's not just good at their job, but understands how that number is going to be reported. I'll give you a simple example. One of the first things when I was getting my CMA, I really started getting interest in variable costs versus fixed costs. And I went way off of any kind of standardization as far as charts of accounts go, because I started setting up all my accounts based on categories of variable and fixed costs. Because just with those two, categorizations, I was able to learn so much about what was driving profitability and what was not helping profitability, right? And if you don't know that as a bookkeeper, I'm sure you've seen this too, Rocky, is you look at a P&L of a kind of a standard bookkeeper who's been working at QuickBooks for a long time. They might have revenue, cost of goods sold, and then expenses. And the expenses are all in no particular order. They're just all, maybe they're alphabetical, maybe they're not. There's just a whole bunch of numbers, right? And I look at that and I'm like, well, what can I do with that? I've got to go line by line and say, okay, is our gas bill too high? What was labor over last month, right? There's just no structure to it. And so to be able to look at your data and say, okay, this group is labor, this group is facilities, this group is marketing, this group is other general administrative, or this group is variable and this group is fixed. Once you start categorizing it, that's when you're able to analyze it. That's when you're able to say, oh, these numbers very obviously tell me to take this action. So I think a bookkeeper needs to understand that reporting, and they need to set up their chart of accounts that helps get the reporting that a business needs, right? Which it can be different for different businesses. And I think that's maybe why the standardization isn't really there, because different businesses have different metrics that matter to their profitability. So you've got to understand those metrics. How do we then enter the data so that it flows into those metrics in a way that we can quickly get the data out and analyze it? If you've got to sit down every month and like line by line break those out, you're not going to do it. Really, is the truth. You need an automated way to do it. So that's kind of what we focus on, is how do we take a set of books and put it in those structures that make sense for reporting.
And I think the other thing that's always missed, and we haven't talked about it, is the balance sheet. And it's very rare that people will compare balance sheet month to month to month to month. It almost never happens. And that's one of the biggest things we do, is we look at the balance sheet month to month to month to month and see where the changes are occurring, because so much gets hidden in that balance sheet that business owners may not realize. It could be inventory. It could be paying back debt. It could be them taking a little too much money from the company. There's a whole bunch of things that show up there that dramatically affect cash flow that I think most people just ignore altogether.
Yeah, well, and I think it's ignored because a lot of people don't understand, not necessarily they don't understand how to read the balance sheet, but they don't understand how to, again, take action on it. Like, what do we do with that? Let me tell you kind of an embarrassing story. So when I was very new at bookkeeping and QuickBooks, right, I was just learning still really. I did not understand the relationship between inventory and cost of goods sold. And I set up some inventory incorrectly in QuickBooks. And a month went by and I went to the owner of the company and I said, we are doing amazing this month. We've made $200,000 and typically a profit for that company was maybe $30,000 a month. I'm like, we've made $200,000. I don't know what we're doing, but we're crushing it. We're just doing great, right? Well, I then went to the balance sheet and I had huge amounts of inventory on the balance sheet. And I was like, wait a second, this is what we sold. Why is it still on my balance sheet? And I went digging into it and I had somehow set it up so that we sold one kind of inventory, which really wasn't related to the inventory on the balance sheet. It was just like selling a service, right? There's nothing to come off. And so instead of all of that inventory on the balance sheet going to cost of goods sold, like it should have been showing up as costs, it was still on our balance sheet. And so I had to go back to the owner and say, hey, we didn't actually make $200,000. We were making, I don't remember, maybe we're making 15 or zero. I don't remember. But it's that kind of thing, right? The balance sheet tells you so much about really how you're doing. And if you don't understand a simple thing like, if you have an extra 200 grand of inventory on your balance sheet, it's not supposed to be there. You're not going to know how to take action on it.
And the only way you're going to see that is to look at a differential month over month.
Absolutely.
Most people look at a balance sheet as a static event.
Right. So one of the things that I love to look at on the balance sheet that we put on our dashboards too is metrics like your cash ratio and your quick ratio. So you can see if you can pay your bills, right? And you look at those as trends because you can very easily see, are we moving in the right direction? I've had clients who they do so well that we've gotten to the point where I have to say, look, you have way too much cash just sitting in your checking account. Let's find something better to do with that, right? An investment of some kind. But I've also had clients where you see that trend line just go from January to December, going down all year long, saying your cash compared to your liabilities. And if they don't see that trend for a whole year, well, again, that's part of managing your cash flow, right? They're going to miss that. But if you're looking at that at least for the past 3 months, you're going to see some kind of trend to see, hey, oh, no wonder it feels like we have no money to pay our bills. It's because we don't, right? We should have seen this coming. So I totally agree. We got to look at that as how it changed from prior periods.
It is. And it's just one of those things. And again, you have to make the time. You have to get the information in a way that makes sense to you. And then you have to do something with the information and take action. I mean, that's literally what it comes back down to.
Yeah.
If people would like to learn more about you, find you, what's the best way for them to do that?
Best way is my website, again, zerotocfo.com. And it's all spelled out, CEROTOCFO.com. I'm doing a promotion, Rocky. So our basic package for a dashboard, it's $175 a month, which puts all these numbers right in front of somebody. For your listeners, I'm doing a coupon for just your name, Rocky. Gets you 25 off indefinitely. So it's only $150 per month. But what it does, it plugs into your QuickBooks. I create the dashboard, working with you to find out, whatever the metrics are that your company needs. We put in some targets based on your industry, and I'll go through with you how to read those numbers and interpret those numbers. And then it just runs. And so you get that in front of you at least every month or more often if you want. And if you need some help with it over time, you certainly can schedule time with me for an hourly fee. But like I said, having that stuff in front of you every single month, that's one of the most important things you can do as a small business owner. And I think especially right now, right at the end of 2022, the market out there looks crazy. And those who run a tight ship, I think, can navigate it. Those who really have no understanding of why they're profitable or why they're not, it's not going to last. That's my opinion, but I don't think it's going to last. So yeah, zerotocfo.com.
And we'll put that link in there. Thank you so much for joining us today.
Thank you, Rocky.
A lot of what we talked about is what we do for our clients as well, and what's in the Profit Blueprint course we offer. We recommend you create the Forward Cash Flow Planner, whether it's 13 weeks or 12 months or whatever works for you, so you can see what's coming. One of the great things about Profit First is that because you're using the bank accounts, you get an early warning sign of what's happening in real time. At the end of the day, the most important thing is taking action and knowing which levers you need to make a change to increase your cash flow and profitability to achieve the results you want. You have to take the time to think through this and find a good dashboard. You can use Nate's, you can use ours, or you can use someone else's. Just get one that works for you, that you understand. And remember, you don't need more resources. You need to be more resourceful, which is what we're talking about today. Remember, we focus on the bottom line.
If you'd like for us to be a part of your profitability journey, we have different programs available ranging from do-it-yourself to one-on-one coaching. Our course, The Profit Blueprint, teaches you everything you need to know to transform your profitability. There are 3 different tiers ranging from DIY to done with you so that businesses of all sizes can get the support that's best. Join the waitlist in the show notes to get more information and be a part of the next cohort. If you want a done-for-you service, you can hire us as your Chief Profitability Officers. We only work with a handful of clients, so they all get our full attention. We work with business owners who have or are growing to $500,000 to $10 million in revenue. You can use the scheduling link in the show notes to get on our calendar for a good fit conversation to see if we're the right people to support you and how we can help you.
This episode of the Profit Answer Man podcast is brought to you by SMBpodcastnetwork.com. The network is a collection of podcasts and shows from around the internet which focus on bringing you interviews with amazing guests who share actionable advice, ideas, and information for small and medium-sized business owners and entrepreneurs. Visit www.smbpodcastnetwork.com to find more great shows and easily subscribe to be notified of new episodes. It's a great way to discover quality content. If you've discovered us via the network, then I hope you enjoy today's show and will consider subscribing directly so you never miss our episodes. Remember to check out my other podcast, Richer Soul, where we talk about how to live the ultimate life and be the best business owner you can be. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.